So let me start by talking about the jobs number that came out on Thursday, and that is the official non-farm payroll number from ADP. And that number was supposed to come out at 160,000 jobs created. And the number actually came out at 278,000 jobs. So not quite double estimates, but a big number. It was well above the expectation, which was 150,000 to 200,000 jobs. And the prior month's number was only revised slightly lower, from 296,000 to 291,000. So it was a much stronger number that had been expected. And in fact, earlier that morning, we got the Challenger job cuts numbers. And that was a big number. You know, the prior month was 66,995 jobs created or eliminated. And the number for May was over 80,000 jobs, 80,089. So that was a big number. And maybe after that number came out, some people might have thought that we would have had a weaker ADP number instead of the much stronger ADP number that we ended up getting. But again, you know, looking beneath the surface of that number, and you know, you don't have to look too deep to really see the problems with the number. 75% of those jobs, 208,000, were in leisure and hospitality. Those are waiters, bartenders, hotel maids, stuff like that. I mean, these are some of the lowest paying jobs that exist, and those are the ones that we're creating. You know, we lost 48,000 manufacturing jobs. That's a lot of jobs. Those are good paying jobs. Chances are all those jobs were full time. Whereas a lot of these jobs that are added in hotels and bars and stuff like that, they're probably part-time jobs. So we are trading high-paying, full-time, productive jobs for low-paying, part-time service sector jobs. This is not a good trade-off. I think the people that got some of these jobs are not happy about having them. I think they'd prefer to have the better job that they lost rather than the 2 or 3 crappy jobs that they had to hobble together to try to make up for that loss. You know, also, we lost 35,000 jobs in financial services. You know, those I don't think are as important as the manufacturing jobs, but they are generally high paying. You know, the financial service industry is one of the higher paying service sectors out there. So maybe somebody lost their job working for a bank and now they got 2 or 3 jobs tending bar and waiting tables, right? That's good for this number because, you know, you lose one and you get 3, so you're plus 2, so you get more jobs. But, you know, the workers aren't getting, you know, more job satisfaction, and they're probably getting less money, you know, especially if they have to travel between jobs, and that, you know, that takes time and they can't get paid for that. So I don't think the number was strong, but, you know, the markets don't tend to look at, you know, down deep. They just kind of look at the superficial number because that's probably what goes into the algorithms that kick off all the computer trading. And so they saw this stronger than expected number. And of course, initially gold sold off, the dollar rallied, but then the markets reversed. We had a pretty strong rally in gold, you know, maybe up about 20 bucks, 15, 20 bucks. The dollar sold off. And I thought, you know, maybe the markets are finally moving past this. You know, we got a stronger number and, you know, the market shrugged it off. Gold shrugged it off. Maybe, you know, the correction is over. Maybe we flushed out all the week longs. You know, now gold's going to move up. And, you know, in fact, we got more weak data too. I mean, the employment data didn't appear weak, but a lot of the other data did. Productivity and costs we got for Q1. And even though the number was not as bad as they thought, it was still a down number. It was minus 2.1% on the quarter. Productivity going down is not a good news, even if it went down somewhat less than they thought. And the reason it was down less was because unit labor costs didn't rise as much as people thought. They were supposed to go up by 6.3% and they went up by 4.2%. Now maybe the markets looked at that as somehow good news on inflation because they saw a lower print for labor costs and they thought that might be a positive. The PMI numbers we got came out. This was the May number at 48.4. That was another weak number below 50. And the ISM manufacturing was weak also, even slightly weaker than expected. It was supposed to come out at 47, and it came out at 46.9. Again, anything below 50 indicates contraction, recession, and so we're clearly in that category. The prior month was 4.71, but also we have all these weak economic data that we keep getting. Why do we keep getting these strong jobs numbers? Especially the report we got on Friday, yesterday, from the government, because this was an even bigger upside surprise than the ADP number. But of course, beneath the surface, it probably has even more problems and inconsistencies that call into question the validity of these numbers. So the expectation for the jobs number for May was 190,000. And the low end of the range was 100,000. And the high end was 265,000. The number came out at 339,000 jobs, way above estimates. And as soon as the number came out, the price of gold tanked, maybe down about 15, 20 bucks initially, right away, just like the initial reaction to the ADP. Dollar went up, the reaction that you would expect, because that's the type of reaction that we had been getting. And in fact, the number was even stronger if you look at the upward revisions to the prior couple of months, because we added about 93,000 jobs were added to the prior couple of months. So it was an even bigger beat. But what was somewhat surprising, given all those jobs being created, is that the unemployment rate rose from 3.5% to 3.7%. Nobody expected that. That was a big jump from the 3.4% from the month before, and above expectations, which were 3.4 to 3.5. So that was bad news about the economy, but maybe it's somewhat good news if you're thinking it takes some pressure off the Fed. But bond prices fell, yields rose, mainly due to the top line, the top number being so strong. In fact, if you look at these jobs numbers that have been coming out, this is not the first time that we've got a strong jobs number. In fact, out of the last 13 jobs reports that we've got, that's just over a year, 12 of the 13 have beaten the consensus. That, to me, doesn't make sense that it would be 12 out of 13. You figure that they'd come under a few times, but for it to only miss one time, to me, that raises eyebrows. Why are the numbers as strong as they are? And again, if you look at the numbers, the jobs are in the lower paying industries, part-time. We lost manufacturing jobs, not as many as ADP claimed.